Awesome. Hi, everyone. Welcome to the next episode in Zenskar's webinar series. Today we have Mr. Madhu Jagannathan with us. He has a very illustrious career so far. Started his career back in the day with EY, then he was at Wipro, moved on to bigger companies like Microsoft in Seattle, and then at Dropbox as well. And then after that he kind of made CFO at a couple of different companies, and today he's the CFO at Lob, which is disrupting the world of direct mail. It's about a 10-year-old company, and they're leaders in their space, and yeah, you should definitely check them out. The topic of today's discussion is the evolution of the finance vertical. We'll talk more about SaaS, but also kind of touch upon verticals outside of the SaaS function. Uh, Madhu, just to get started, maybe you can take half a minute or a minute to quickly talk about your background more than what I just did, so people have context when they hear your insights.
Happy to do that, Apoorv. And thank you so much for having me on this webinar. So, just for some quick context, I started my finance career way back in the late 90s. I started my career in public accounting. I worked at Ernst& Young. And then I was really lucky because as I was, finishing my chartered accountancy, the technology business in India was really taking off in a very big way. It only became natural that as I stepped out of public accounting, that I joined a technology company. And again, I was very lucky because I grew up in Bangalore, which was at the heart of the technology boom. So I joined Wipro Technologies. I was 21 years old, and I had a lot of energy and a lot of enthusiasm for learning and growing. And Wipro was really taking off in a big way as well. The company was growing leaps and bounds, which only meant that many of us, not just me, many other people like me who joined the company, got opportunities to grow. We were asked to take on roles that we were hardly prepared for, and quite frankly, we were kind of inventing and reinventing ourselves on the go. I moved to the United States thanks to Wipro in the year 2006. I've been here for the last 17 years. And I continued to work at Wipro for 5 more years after I moved to the United States. And then I joined Microsoft. As you all know, Microsoft is a very, very large technology company. And being based out of Seattle, it just became a natural transition for me to join Microsoft, which is where I first got a taste of what it's like to work at a startup. And so I made a commitment at that point that I would try to transition away from large publicly listed companies to earlier stage, venture capital backed startups. My first taste of startups was at Dropbox, and it's a very big turning point for me, honestly, Apoorv, because Dropbox is where I first got introduced to the concept of SaaS.
Yeah.
Concepts like churn, concepts like ARR, LTV CAC. These are things that I had never heard of before, and
Yeah.
then joining Dropbox was like a great opportunity for me to work with some of the smartest and the brightest people. And then from there on, I continued to double down on working for VC backed companies. And here we are today, 2023. I'm working for a YC backed company. As you all know, coming out of YC is a huge achievement. And
Yeah.
I'm really fortunate to be working with so many talented people here at Lob.
Awesome. No, Madhu, thanks for the introduction. And yeah, I think one of the reasons we kind of wanted to chat with you about this was because you've kind of seen the finance function even in the SaaS space as it was, let's say, 10 years ago, and of course you're leading it today. So to begin with, for our audience, could you shed some light on uh, how you have seen the finance function? And when I say finance function, I don't mean the tooling. I actually mean the role of finance professionals within a software company. How have you seen that evolve in the last decade? If you contrast it back to 2014 versus where it's today, there's a whole host of business models that have come in that have evolved. On the pricing side, there's a whole lot of technology available today. What does that really mean for finance professionals? How has life changed?
Yeah, for sure. I mean, a lot has changed, in the last 10 years. It's funny, right? When you asked me to think about how finance functions have changed and how has it changed, particularly in SaaS companies, I actually had to go back and refresh my memory a little bit. And it turns out that the SaaS business model was initially introduced by Salesforce way
Yeah.
back, I believe, in 1999 or 2000. And
Yeah.
so by the time I actually joined Dropbox in 2014, 2015 timeframe, SaaS was not a new concept, but you'll be
Yeah.
amazed, even then, the tooling and the infrastructure that was required to support those types of business models hadn't evolved all that very much. And so, from that perspective, we were still in the very early days of trying to figure out what it's like to support SaaS business models, and then continue to support these businesses as they evolve even further. And today we talk a lot about usage based billing, hybrid pricing, and so on and so forth. A lot of these things did not exist way back in 2014 when I first got started. A lot of what we did involved spreadsheets. A lot of it involved cobbling data from different data sources, trying to make them match, trying to see if it even makes sense. And fast forward to today, we have amazing third party products that are available that can allow us to resolve some of these basic plumbing issues. So we can be up and running much, much faster. But spreadsheets were where we all lived in 10 years ago. And, I think to this day, a lot of companies still rely on them. But I think, we can all expect to be a lot more smarter in terms of how we think about tooling and plumbing as we support our business leaders.
Makes sense. I'll dive one level deeper into that, Madhu. So of course, there's a whole lot of tools available. We are of course one of the many tools in this space. How do you look at like let's go back 10 years ago. At that point, what was the finance stack? I don't I'm trying to understand what tooling did you use back in the day, and
Mhm.
what problems was this tooling solving for you at that point, and how has it evolved today? Like what is your stack today, and how has the tooling evolved over the last decade or so?
For sure. I think, on the CRM front, not a lot has changed, honestly, at least as far as I'm concerned. Salesforce is the default CRM system that most companies go to. There is a certain level of familiarity with that system. End users like sales reps are very, very familiar with using Salesforce. So I think a lot of companies continue to default to Salesforce as their CRM system. And as
Yeah.
far as I'm concerned, we use Salesforce to track pipeline, right? Right from the
Sure.
time an opportunity is created all the way through to when an opportunity is either closed or lost or closed won. And
Hmm.
then starts the drama because a lot of times data from Salesforce is never integrated into any other system. And so, from that perspective, there's a lot of duplication of data in other systems in order to take what we consider as a closed won opportunity into RevRec models, and then how you think about accounting it within our ERP system. There's a not a lot of good handoffs. Companies to this day struggle with that. I'll be perfectly transparent. Even today in our company, we have all sorts of silos in terms of how data moves in and out of Salesforce.
But has this changed? Like when you look back at the silos 10 years ago, has it
Mhm.
gotten any better, or is it still the same?
No, I think there are a lot many more options today than there were before. So from that perspective, I think my job as a CFO has evolved into understanding, first of all, build versus buy considerations. We have to really think about whether third-party tools can meet our needs, or do we really need to invest in engineering resources in house. And then we have to think about evaluating these third party tools in a very objective fashion, making sure that these products that are available in market can not only meet our needs today, but can scale with us and can evolve with us going into the future. We have to think about whether these products are flexible, will allow us to also not be constrained as we think about changing our own business models in the future. So there are a lot of considerations around how we evaluate a product, how we implement it. So from that perspective, I'll say that my role has changed a lot. Back in the day, it wasn't an option. You just basically relied on spreadsheets. Now we have to think really deeply about some of these considerations.
That's interesting you say that. So of course there's a whole lot of tooling that's available. Back in the day it was more spreadsheets. So like on a day-to-day basis, people are still working, I don't know, same 8, 10, 12 hours a day, whatever it is. Has the kind of work they do changed because there is tooling available? Like are they spending the same time doing different things, or how has that evolved?
Yeah, no, I think businesses are becoming way more data driven. We are
Correct.
not necessarily taking our decisions based on intuition. We want to be able to validate our intuition with actual data. So from that perspective, there are demands, either from the CEO or from the leaders of various other functions, and they want to be able to look at historical data patterns before, informing themselves of the future. There
Mm-hmm.
is also this tendency to want to do, either you call it A/B testing or multivariant testing. We want to be able to test our hypothesis, get data back, and then make decisions. From that perspective, as finance, leaders, we are sort of required to support those aspirations. And so whether you're looking at historical data patterns or whether you're trying to support, product teams and engineering teams with A/B testing going into the future, there is a lot of need for us to have good tooling and plumbing in place so we can actually in a very agile fashion support our business needs. If you're going to go back to the tried and tested spreadsheet route, you're probably not going to be able to respond in an agile fashion, and therefore if you have the right tools in place, you can achieve some of these objectives.
Interesting. So you're saying that because of tooling, just that there is more expectation from the job today, and to be able to meet that expectation of being, able to drive decisions based on data, you need tooling. Whether that tooling is kind of being built in house or using a third party, that's a different question altogether. But spreadsheets won't help you match up to what the C suite is asking from the finance function, which is being able to kind of support that data driven decision making. Is that a fair way to kind of summarize what you said?
Absolutely. And I'll give you an example to make this real for you, right? So, in today's market, as you know, sales cycles are taking longer. It's harder to close deals. Average deal values are going down. There's a lot of pushback from prospects on whether they should actually spend money on a solution. And so, in a world like that, almost every company, yours and mine combined, right, we basically have to get better at achieving sales efficiency. And so, when you're thinking about sales efficiency at a company level, it's one thing, but then you also want to be able to slice and dice that data down to a segment level. Are we
Yeah.
doing better in the SMB sector? Are we doing better with mid market? How are we doing with large strategic or enterprise accounts? What about the self serve motion? And so when you think about looking at any metric, there
Yeah.
are lots of different ways to evaluate sales efficiency. You can talk about CAC payback period. You can talk about NRR. You can talk about GRR. Any of these metrics that you look at, you need to be able to slice and dice that information down to a
Yeah.
segment level, at a product level, at a
Yeah.
geographic level. So doing that kind of analysis on the fly, if you're going to rely on spreadsheets, you're going to struggle because you will have a lot of limitations around what you can ingest into a spreadsheet, how many rows and columns it can actually accommodate, how you
Yeah.
can actually slice and dice it. There are all sorts of limitations. So you really want to make sure that if you're truly being an effective business partner, you actually have the plumbing in place so you can actually do a lot of this type of analysis in a very agile fashion.
Fair. Fair. That, so you make an interesting point about being able to slice data. But one could also argue that it's actually easier to slice data in a spreadsheet than it is in a tool that will force you to do things a certain way. How do you kind of look at that difference between using the flexibility of a spreadsheet versus being bottlenecked by what the tool can offer with your the ability to slice and dice data in a certain way?
Yeah, no, I think first of all, one of the limitations of spreadsheets is that one, checks and balances are harder to enforce. User controls are harder. You don't know who's manipulating that data and what errors they're introducing into spreadsheets. And you
Hmm.
obviously have just rows and columns to work with. Like it's literally limiting from that perspective. And when you're evaluating a third-party tool, you obviously want to take some of these things into consideration. You want to make sure that it is reasonably flexible, that you have the ability to design it how you want it, and that it will change over time. If you want to change the data model and you want to actually reflect the new realities of the business, you should be able to do that. So I think it really comes down to making sure that you have your evaluation criteria properly written down, and that you're doing this evaluation in a very objective fashion. Because if you're very short sighted about how you're evaluating something and you basically try to solve yesterday's problem or today's problem, and you're not
Hmm.
future proofing yourself, chances are you'll grow out of that solution in a very, very short period of time. And then once again, as you said, it will becoming a limiting factor, and you're not going to be able to support your business anymore, right? And switching out of a system and moving to another system is a completely different ball game altogether. It involves
Yeah.
a lot of pain, so you want to be really careful about making sure that you're future proofing yourself.
So I'm going to dive deeper into this point that you just made about flexibility, because we hear that a lot, right? That people should think of when evaluating a third party tool versus even an in house tool or a spreadsheet, you need to look for flexibility. What does flexibility really mean? Like, when, as a finance professional, if I have to kind of go evaluate a tool
Hmm.
and my CFO tells me make sure it's flexible, what does that really mean? Like, what do I need to be checking for to make sure it's actually flexible to be able to do the job that my CFO wants me to do?
Yeah, for sure. So let's just take a real life example, right? If you think about the entire quote to cash process, right? And that's where a lot of complexity usually comes in within a company. Typically, when you think about procure to pay, it's very, very standardized. It doesn't matter which industry you're in, it doesn't matter what the size of your business is. It's a very standard process. But when it comes to quote to cash, a lot depends on the complexity of your business model, your product portfolio, your customers, your pricing model. All of these things actually have a role to play. And
Hmm.
so I'm just going to use quote to cash as an example. And within
Sure.
that, what does flexibility mean? So you have an existing product portfolio that's
Yeah.
hopefully not going to remain static forever. You
Yeah.
need to have the ability to introduce new SKUs, and that shouldn't be a limiting factor. That's very obvious, right? So in the future, if the company chooses to introduce a new product, you want to be able to create a new SKU,
Yeah.
give it the right parameters. Is it a hardware product? Is it a software product? Is it based on subscription? Is it a one-time license fee? Those kinds of things you should be able to quickly add without any limitations. That's one example.
Okay.
The pricing model can change. Initially you might have a subscription pricing model. You might decide that maybe you want to move away from subscription and you want to have usage pricing model. That is a possibility. You should have the ability to create bundles. You have SKUs, then you want to be able to create bundles along the way because you want to cross sell and upsell different products to your existing customer base. That's another example.
Hmm.
Like this, there are lots of things that can change within a company. And so as these changes occur, you don't want to be the one going to your product team or your CEO saying, hold on for a second, you actually cannot do that because our systems don't support it.
Hmm.
That's very problematic. In You can never anticipate how the market evolves over time, and companies need to be able to adapt. We have really, really large companies like a Microsoft that has shown so much agility and have adapted themselves. If you really think
Hmm.
about how Windows or Office was being sold to how it is being sold today, that business model has evolved so much, and they're able to adapt themselves. And so smaller companies should be able to do that even faster. Like, the one advantage that startups have over larger companies is
Yeah.
agility and speed, right? And if you're
Yeah.
not going to have that, you're going to give it up, then you have a huge problem because you want to be able to move quickly and adapt.
Makes sense. Makes sense. Yeah. I mean, business models will definitely continue to evolve. So, uh, on that lens, you need a future-proof system, and I don't think, definitely spreadsheets just like bottleneck you over there. So even moving on from spreadsheets, flexibility, I do agree, becomes super important. But I'm trying to kind of uh, what you mentioned in terms of business models and in terms of pricing uh, in the code to cash process. Let's kind of focus on, let's say, the last leg of that process, which is more around the RevRec piece,
Hmm.
where I have to kind of make sure that I'm creating the journal entries in a compliant manner. uh, there's no right answer usually. When I'm Oftentimes you have to exercise your judgment regarding how to recognize revenue. They could be done in a bunch of different ways depending upon the specific context of the situation. Uh, and with the point that you just made about pricing models evolving, business models evolving, can you touch upon two things? So one is, with this evolution, what does that mean for the world of revenue recognition, the job that junior finance profession has to do on a monthly basis to make sure you're staying compliant. And on that, the second layer of question is, uh, how much of this can be done in a spreadsheet versus in a tool? Because I would almost imagine it's easier to do it in a spreadsheet given the amount of judgment you have to exercise versus being able to do it in a tool. But obviously, it's more time consuming. So, trying to kind of understand how you have seen that world evolve from a tooling perspective.
Yeah, for sure. I think it all begins with making sure that the way you write contracts and the way you actually execute those contracts is as standardized as possible. A
Yeah,
lot of times, in the interest of getting a deal across the finish line, companies tend to make all sorts of accommodations to contract
yeah,
terms. This could be either commercial or non-commercial. What I mean by that is, in some cases, you might get into very unique pricing arrangements with a customer that are non-standard, that can create all sorts of complexities down the line in terms of how you record that. So, you might have a very, very simple business model normally where you're selling a product. Let's say you're charging the customer $1,200 per year as a subscription fee. You're
yeah,
recognizing $100 per month. Pretty straightforward.
yeah,
Now, you can start to make that a little bit more complex by trying to convince a customer that they have to subscribe to this. So, guess what? Same $1,200 product, I will throw in some professional services for free. Let me help you with implementation. I will assign you two engineers for 3 months for free. You don't have to pay for it. Just sign the deal. That might seem like a very harmless give, but in reality, when you think about assigning value for your product, you now have to think about whether your product is truly worth $1,200, or should you have to allocate your dollar value across two different line items. One is the product itself, and then the separate line item, which is professional services.
yeah,
And that's a very, very simple example of how your deals can start to become more complex. Now you
yeah,
can start to think about other ways in which you can try to entice a customer to give you the deal. And you might have other forms of discounts. So, for example, you might tell the customer, if you upgrade to a higher pricing tier during the year, I will
yeah,
discount this original $1,200 down to $1,000. Think of it as some sort of a volume discount,
yeah.
and now that can create newer complexities around how you think about revenue recognition. And
Right.
so there are lots of nuances that you can introduce into a contract
Yeah,
that, at the time of signing the deal may all seem very reasonable. But as an accounting professional, when you take that signed contract and start to think about inputting it into a RevRec tool or even your own spreadsheet, you have to look at ASC 606. You have to
yeah,
figure out what the rules say, how to allocate dollar value to different products. Is it really your revenue or is it a pass through revenue? For
yeah,
example, you might have a deal where you have a set of products that you're selling, and then you may have a partner product that you decide to introduce into the mix
yeah,
as a bundle. And then you have to really think about how to account for revenues associated with a product that's not technically yours. It is being
mm,
offered by a third party. And then there are rules around that you have to take into account. So, anyway, long story short, the complexities all begin with how you structure your contract and what the contract actually says. And you
yeah,
have to be really, really good about making sure that you stick to standard language as much as possible. But then if you start to deviate, understanding how you're going to reflect that within your RevRec system or your RevRec process, so
yeah,
that all of these issues are being captured upfront. Because if you
yeah,
don't do it the right way, when it's time for audit at the end of the year, your
mm,
auditors are going to pick up on these things, and they're going to come to the conclusion that you don't have proper controls, and that they're
yeah,
going to enhance their sample size. They'll want to test more transactions. It will
yeah.
delay your audit. It will add to your overall cost. It will add to the frustrations of your team. And then ultimately, what should have taken a lot lesser time will end up taking a lot more time to get the job done.
I mean, I hear what you're saying, but I feel like these terms and contracts are just inevitable. Like oftentimes you're trying to close a large deal and you have to kind of sweet it. Like as a salesperson, you want to be able to kind of close the deal, and if it means throwing in a certain discount, or maybe 2 months of a free implementation or something like that, you you want to do it to get more revenue. And now, to your point, it's the accounting team's headache to kind of figure out how to stay compliant.
Hmm.
uh, I personally don't feel like contracts will get any less complex. I feel like if anything, it's only getting more complex. It used to be license based back in the day, then it kind of became a hybrid of license plus subscription, moved towards subscription. Then there was a usage component. Now there's like hybrid subscription plus usage. Like it doesn't end. So given
Mhm.
that this complexity is increasing, and salespeople will always want to kind of get more creative to close a deal, as an accounting professional, how do you make sure that you are staying compliant? And of course, you have to exercise judgment. You have to kind of make sure you're, doing the allocation properly on a line item level. But how much of that can actually be done in a spreadsheet? Do you need a tool for that? Is a spreadsheet better? Is a tool better? What are the pros and cons of doing this in a spreadsheet versus in a tool?
Yeah, no, for sure. I think you're right. Look, at the end of the day, accountants get paid their salary when there's actually sales. If you
Yeah,
enforce so many restrictions that a deal cannot be won,
yeah,
then the reality is that the company is not going to go anywhere, and then there's no need for an accounting team at all, right? So you have to be, always cognizant of the fact that you have to win customers, you have to sell your product before everything else. But
yeah,
having said that, I think what you can do thereafter is to really beef up your function in terms of, when I say you, I mean the CFO, in terms of how you take a contract, review it properly, make sure that the rules are applied properly. And then as
yeah,
you're thinking about integrating that data into a RevRec process, that
yeah,
you're catching all of these issues upfront and not catching it after the fact, because what you don't want is, 6 months later or 1 year later, having to restate your financials because you
yeah,
did not recognize revenue properly. Because God forbid, if you're a public company and you've been reporting your results quarterly, you definitely don't want to be going back and restating historical financials. But
yeah,
even if you're not a public company, if you're a private company, you definitely have reporting obligations to your board, to your bankers, to your lenders, to your senior management. From that perspective, you really want to make sure that you're not catching this only at the time of audit, and that you're setting up all of these rules upfront in a manner. When I say rules, I mean revenue recognition rules, such
yeah,
that you're catching these things upfront and you're recording it correctly the first time rather. But going back to your question around spreadsheets versus tooling, look, again, spreadsheets are great to spin up when you're really, really early stage. If you are
yeah,
like still, in your first year of revenue, maybe even your second year of revenue, you're still trying to figure out what your product is, who your customers are, what your pricing model is going to be. Maybe you don't want to rush to implement a very, very rigid system upfront, which is very
yeah,
expensive even when you're very early stage, right? Maybe spreadsheets are fine for the first, few quarters of your existence. But
yeah,
then a day will come when the company is starting to scale, and you really have to think about setting up processes that will scale without you having to add a lot of headcount. Because typically, your G&A headcount is not going to grow linearly in proportion to the company size. You
mhm,
expect to have efficiencies within your finance function, within your accounting function. And so you want to start to establish systems that will actually scale
mhm,
elegantly, so that the number of people that you need to support these processes are not necessarily scaling infinitely, right? That's when you have to make really, really thoughtful choices, and you have to be very careful about the choices that you make, because a lot of times, once you set up a certain system and you have a lot of data that goes into that system, switching thereafter becomes extremely difficult. So you want to be as thoughtful as possible as early as possible, because the cost of making corrections after the fact when it comes to changing processes and systems is going to be a lot more. The unfortunate thing with startups is that we tend to ignore G&A. We spend a
yeah,
lot of time getting our product right. We like to get our engineering function in great place. We want to get great go-to-market leaders. A lot of focus is around that, and
yeah,
founders typically spend a lot of time and money getting their product right and their sales right. G&A is a neglected function. Typically, in
yes,
the early stages, typically it's even an outsourced function. There might be
yes,
an accounting firm that's actually doing a lot of this. They're probably using QuickBooks in the early days and a lot of spreadsheets. But once you start to build an in-house finance team or an accounting team, you really want a strong controller who has seen this before, who knows what this all will likely end up be in a few years, and therefore can preempt some of these problems upfront.
fair. And again, I'll dive one level deeper into that. Use, of course, there's a whole lot of value to be added by using tooling to make sure you are recognizing revenue properly, especially after you've left the first few quarters of your existence. But when you like evaluate a tool on the RevRec side, and maybe you could kind of contrast how this has changed over the last decade or so as pricing has gotten more complex, thereby making RevRec more complex. Uh, what do you really look for in terms of flexibility here? Like, is it still the kind of pricing, like it has to be more than just the pricing and the SKUs that I can encode over here on the RevRec side? So what do you look for in a tool in that case? As a, let's say I was told by my CFO to go look for the RevRec tool, what should I be looking for?
Yeah. Now, I think it's inevitable that in a growing company that you're going to have a lot of other systems in play. There is
Yeah,
obviously this CRM system. We talked a lot about it, which happens to be
yeah,
Salesforce, let's assume. You're going to eventually have an ERP system that does a lot of your financial reporting and accounting. You want a
yeah,
tool that integrates very nicely with most of the leading third-party tools, whether it is NetSuite or Sage Intacct. You want to make sure that this tool integrates, because the moment you have breakages and handoffs, and you're going to have to download a report from one tool, upload it into another tool, and so on and so forth.
yeah,
You introduce opportunities for error. So
yeah,
integration becomes a really, really important aspect of any tool that you choose. That they need to be able to talk with one another seamlessly, and that it's not going to require a ton of engineering effort to make these systems talk to one another, right? Um, then, of course, when it comes to revenue recognition, there are all sorts of rules around it. You want to make sure that you're not having to hard code these rules, because these rules change over time. So I'll give you an example. When it comes to sales tax, as an example, right? Sales tax rules are extremely complex. They change by state. You're not going to be able to keep track of all the changes in how these sales tax rules evolve over time. And so you really want to choose a product that can actually incorporate these rules within the product itself. So as
yeah,
an end user, I don't have to worry about keeping track of any of these things, and that
yeah,
the sales tax calculations are completely automated and are current.
yeah,
Similarly, when it comes to RevRec rules, I suspect that these rules are not going to stay static. Over time, things will change. You want to make sure that the tool either automatically updates these rules, or if not, at least you have the ability to sort of input the rules in a manner that they will always remain relevant, and they're not so rigid that you cannot change these rules in the future.
and you want to be able to input these tools on your own, or do you want like does it have to be self-serve as a accounting professional, or can you tell the tool or somebody on the implementation side to do it for you? How should you think of this?
Yeah,
uh,
no, certainly. You definitely don't want to have to rely on external consultants for a very long time, because
yeah,
that also creates a crutch or a handicap.
yeah,
And so, it's not even true for just quote to cash or sales tax. It's true even within the FP&A world, for example. One of
mm,
the things that I tell my teams when they're evaluating products is that let's make sure that the syntax that you need to understand, how you end up updating some of these things, is simple enough that you're not going to have to rely on expensive consultants to come and
mm.
do things for you. You want it to be as flexible as possible, no doubt, but also intuitive enough that you can actually manage. And you have a few trained people within the company. They should not only be an admin for just user provisioning or whatever else, that they're also able to influence the underlying rules in a manner that you're not relying on a third party.
Makes sense. Cool, Madhu. I know it running out of time. I have, one last question that I have to ask. Given this world that we live in, the world is moving towards AI. It's already kind of there, and God knows where we'll be in another decade. So, where do you see the next? How do you see the next decade shaping up? You said the last decade has changed because everybody wants more data, and to be able to make more data driven decisions you need better tooling. The tooling has to be flexible, your spreadsheets can't cut it. But how do you expect the function to evolve in the next decade in terms of expectations from finance teams, and how they will need to keep up with those expectations with the broader advent of AI thrown in?
Yeah, I'm actually a huge technology enthusiast. I'm
Yeah,
an optimist, and I always keep imagining a world where technology is going to make our lives so much easier, and it has, right? Over the last, 30, 40 years, if you think about how our own lives have evolved, I cannot
Yeah.
speak to how things were before, but certainly in the last 40 years, I have seen how much more effective we've all become and how our own productivity has grown, right? And I only expect that to accelerate so much more in the future. And
Yeah.
specifically, if you ask me for actual examples, if you allow me for a minute to fantasize here, what I
Yeah.
think will likely happen is the graphical user interface that we've all grown up loving will probably
Yeah.
become redundant. When we are interacting with a tool, I'm hoping for a world where we don't have to get trained on click this particular tab, go to this button, press this, navigate to this screen, scroll down here, find this button. All of that should become irrelevant. We should be able to interact with applications using natural language, and we should
Yeah.
be able to use plain old English to be able to provide instructions not only to our computer but specifically to applications, and be
Yeah.
able to get it to do things.
Yeah.
And it should apply to every area. It is just not FP&A or reporting. It should apply to an AP process. It should apply to an AR process. It should apply to a quoting process. You want to be able to tell the system, I want to sell this product. This is the price that I think the customer is willing to pay. Create a quote for me. And you shouldn't have to navigate through some complex CPQ system to go
Yeah.
and make that happen, right? Anyone should be able to interact with it freely.
Yeah.
That's one of the things that I'm hoping that a lot of the existing SaaS vendors will start to incorporate. I
Yeah.
think the incumbents clearly have a head start.
Yeah.
I think they all have the engineering might and the capabilities and the financial power to be able to make that a reality. And
Yeah.
I'm eagerly waiting for which tools will come out and actually make all of this a reality soon.
Interesting. Yeah, I mean it's already happening by the way. A lot of the tools that we're using nowadays are having that conversation interface. It hasn't happened as much in the finance world, but it's a matter of time. I don't think it's very far off. So completely on the same page with you over there. Uh, awesome, Madhu. Any last closing thoughts? Anything else you would like to share with our audience as we kind of close out this session for today?
Yeah, I think two things. One is, you touched upon AI. It's funny, right? We are talking today, happens to be August 29th of, 2023. By the time somebody even watches this video, God knows, a few months from now, I feel
Yeah.
like the AI space will have evolved so much that what we are saying right now might be completely outdated, right? A lot will change. I think the pace of change will only probably accelerate. And so from
Yes.
that perspective, I think we are all limited by our imagination right now. I think
Yeah.
there's a lot many more AI applications, to our day-to-day lives, which I'm really excited about, and I don't think I'm able to even imagine what that could look like. So that's the first thing. And I think the broader message to finance professionals overall is be excited, be curious, be open-minded. Be prepared to learn, be prepared to ask great questions, because I think it's all going to come down to how you leverage these technologies. They're not going to replace us; they're going to make us more effective and smarter. And so, from
Yeah.
that perspective, what would take you 2 days to cobble together might take 2 minutes in the future, which only means that you're given back 2 days to do something else, even
Yeah.
more valuable. So I would personally not get too worried. In fact, I should get really, really excited.
Awesome. Well, Madhu, this was super helpful for our audience. Thank you for sharing your insights, and yeah, thanks for being with us here today. Uh, awesome.
Thank you, Apur. Thank you for having me.
Great, great.
Talk to you later. Bye.